All right, good morning, everybody. How are you today? Hope all is well. Today is Wednesday. What is the date? I think it's the ninth. Anyway, let's talk about gold, and I want to just show you a little technical analysis lesson. And with my background in the institutional trading world, I can tell you firsthand what goes on. And I could also tell you firsthand that serious traders in the institutional world don't use silly things like Elliott wave and Gann theory and Fibonacci. What we look at is things like what are the important price levels, what is the trend, what is the momentum, and what is the psychology. So, just a little lesson here. This isn't really a recommendation, but just something that I hope will help you. I just want you to is a good example. The chart of gold futures is a good example of the importance of particular price levels. Now, sometimes a level is important and sometimes it's not. Sometimes we know why and sometimes we don't. But we just need to know that they're there. If you know where the levels are, it's like having a map to the market. Now, look at this. Back here, gold, this is November of 21. Gold ran into resistance around this 1885 level. It ran into the resistance around the same level in uh, June, or May and June. And now look where we found support after this sell off over the last few days, right at the same level. So the same level that's important now was important back here over a year ago. Now, why would a level that was resistance turn into support? Resistance is a large collection of sellers or sell orders around a certain level. When a market's going higher, it's because the buyers can't find enough, in this case, contracts to take in to fill their orders, so they're forced to pay a higher price. When we get up to resistance, all of a sudden there's more than enough supply to fill all of the demand. So that's what a resistance level is. Now, here we are, fast forward to 8 or 9 months later, this level that was resistance has converted into support. Support is the opposite. Support is a large group of buyers. When the market's heading lower, it's because there's not enough demand or buy orders to absorb all of the supply or sell orders. But when we get to a support level, the tide turns. There is enough demand or buy orders. So the sellers can sell all they want without pushing the price down. Why would a level that was resistance kind of miraculously turn into support? The answer is seller's remorse. There are people who sold back here who regretted doing so once the price went higher, and they tell themselves, man, I'm going to buy my gold back, but I'm only going to do it if I can get it for the same price I sold it at. So you have these remorseful sellers placing their buy orders at the same level they sold at. If there's enough of them, it causes support to form, and that's what happened here. So resistance can become support because of buyer's remorse. Now we have the opposite here. Support became resistance. Wait, did I say that right? Seller's remorse can turn resistance into support. Buyer's remorse can turn support into resistance. Investors buy here. When the price goes lower, a lot of them tell themselves, I made a mistake. I want to get out, but I don't want to lose any money. So if it gets back up to my price level, I'm going to sell. So these remorseful buyers place their sell orders at the same level they bought at. If there's enough of these sell orders, the level that was support turns into resistance. We could see down here another example of resistance turning into support. And we can even see down here, I don't have it marked off, but this little level around 16, just above 1600 was support. So knowing how to trade is a lot of things, but one of the main things is understanding how to pick out where the price levels are going to be, which price levels are going to be important. And it's pretty obvious why this is a big help because it helps you know where to buy and where to sell. If a market is rallying and you're wondering, where should I sell? Well, look into the past and see if we're getting close to a level that was either important support or resistance before, because if it gets there, there's a good chance it stalls out and possibly even reverses. Same thing on the opposite side. You want to buy something and it's trending lower, you don't know where to buy it. You can look into the past and say, oh, well, this particular level was support before, or this particular level was resistance. There's a good chance it's a good chance that it stalls out or reverses. All right. All right. That's it, everybody. Just remember, seller's remorse can turn resistance into support. Buyer's remorse can turn support into resistance. Thank you.